Welcome to Serious Business on NDTV. 30 minutes of hard business news. One topic, one speaker, and a conversation that's relevant to you. I'm Manvi Sinha Dhillon. The Instant Real-Time Payment System, launched in 2016 by the NPCI, or the National Payments Corporation of India, has grown tremendously. Today, there are over 1,000 crore transactions a month. We're all familiar with it as end users. We're familiar with the third-party payment platforms. We call them apps. Google Pay, Phone Pay, PayTM, BharatPe, there are many others. This space, the digital payment space, is growing at 70% every month. And that's a fantastic growth rate. But did you know that UPI was designed almost like a public good, a free service for both the users and for the merchants? What many of us don't know is that it costs all the stakeholders, which is the NPCI, the banks, the third-party payment platforms, and everyone else who comes in between. It costs them money to provide this service. And one estimate suggests that it is $500 million for a year's worth of transactions. So what then is the business logic, the economic logic for digital payments? Well, we'll have all the answers today from Rajnish Kumar, former chairman of State Bank of India, an organization that he served for 40 years, currently chairman of BharatPe, as I mentioned, a third-party payments platform. Rajnish Kumar, thank you very much for joining us on NDTV's Serious Business. Rajnish Kumar, I'm coming back to the fundamental question, which I laid out at the introduction to the show, which is, how does the digital payments business make sense, particularly for the third-party payment platforms? What is the economics of it?
Yeah, so there is an estimate that about $1 billion, which is about 8,000 crore, is what the various players in the ecosystem are providing by way of some sort of a subsidy. Part of it gets compensated by the incentive scheme of MeitY. So the last year, I think the budget provision was about 2,500 crore. That is for acquisition of small merchants. To understand the whole thing, let me explain to you that how does it work. There are various players. NPCI is one place, and they get their switching fee. So to that extent, they are compensated. There is no loss to them.
They're making money.
There is a not-for-profit. So even if they are making money, it will ultimately not for that particular organization. It's a not-for-profit organization. It is owned by the banks. So it's all right. There are players like issuing bank and acquiring bank. So for example, if you have a savings bank account with the State Bank of India, so it is an issuer bank, because whenever you make payment, it comes to State Bank of India through the switch and your account gets debited. Then the payment will go to the merchant and it will go to the account of the merchant. It may be with a different bank. It could be the State Bank, but it could be with another bank, say it is with ICICI Bank. So ICICI would have acquired or put a QR code of their own with that merchant. There is a cost to that. That merchant may be maintaining a current account with them. So if there are some funds on that, we call it float in banking parlance, float funds. So some income accrues to the acquiring bank because of that balances which are kept. Similarly, the money which you keep in your current or savings bank account, the issuer bank also gets some money from that balance. But otherwise, purely on the payment transaction, there are so many nodes, there is so much investment in infrastructure, huge number of transactions are passing through the system. So there is a certain amount of overload on the system. The accounts have to be reconciled. There may be transaction failures, then customer grievance redressal, retrieval of money, locating that money. Plus, sometimes frauds also happen. So there are so many costs which are being put on in the players in the ecosystem. So for any system to make it popular, even its government and the infrastructure is provided by the, it's called public-private partnership. But otherwise also when there is a promotion. So private companies also for 2-3 years, they incur sometimes losses on that promotion of that product, but that is a company which incurs the loss. In this case, the loss is getting divided where government also is providing the support and the industry is also providing. So we say example, I take BharatPe, we are another player. So we act as an agent or a third party service provider to the banks in acquiring these merchants. And that cost is borne by us. Now how does BharatPe make money?
That's my basic question.
So BharatPe makes money by facilitating, say, lending product, which is called cross-sell. We have partnership with the lenders, NBFCs, banks, and merchants. We have their settlement account is with the bank again, but the money passes through the BharatPe. So with that money flow, we are able to facilitate lending by analyzing that data, and in that process, after their costs, the fund provider, they recover their costs, their return on net worth, their credit loss, all that is to their account, and whatever is the remaining margin, that comes to Bharat. So when the business, this business, cross-sell business reaches at certain level, only then it becomes profitable. And BharatPe, at least now we are reaching those levels where we are reaching to some sort of a break-even level, and eventually when more business comes in, we may be able to recover our costs and make money. So that is a problem with BharatPe, that is a problem with PayTM, that is a problem with PhonePe.
And PhonePe is the largest and it's still a problem for them.
So because of the payment, the more you do,
exactly,
the more loss you incur.
Okay, so I'm going to paraphrase everything that you've just said and ask you again a fundamental question, which is, therefore, as this space evolves, is it natural to say that all of these third-party payment platforms will ultimately become, financial services platforms, cross-selling multiple financial products, and that is the future to which each one is aspiring?
That is what they are doing. If you look even at PayTM application, so there is everything on that platform. Insurance, travel services and whatnot, and still even in this quarter they have incurred loss. 290 crore, 2 crore, or that's what I read. So despite doing everything, it's still loss because they are a big player. So the more transactions would mean more loss.
And what is the gestation period in your assessment?
So for PayTM, I don't know, it came into existence in 2010 and we are in 2023.
Right.
So, so far it has been all social service so by all these players. So we are contributing to the cause of the nation, and hopefully there will be a time when you will be able to work for the shareholders of
as
the
well.
company.
Well, I'm sure every consumer who's here right now will attest to the fact that it's transformed their lives. So it's a social good which is well appreciated and taken for granted now. We're all making payments through these various third-party platforms. If you had to say there is one challenge that is a sort of unnecessary or artificial challenge for the entire ecosystem, is there something that comes to mind? Something that is just creating a barrier for no significant value?
I would not say that there is a challenge when you are on digital. There is a cost and there are certain risks. Whatever mode of payment, even if it is cash, there are costs and there are risks. Fake currency, there is a risk. The cost of distribution of cash in the system, there is a fairly huge cost. It is almost 40,000-50,000 crore per annum for RBI to manage the currency. So digital is not free. It looks like that you are just making payment, it is free. It's not. There is a cost associated to it. But as we say, for currency, if you want to take note or
there is a cost
there is no cost. So, but that is all built in the system, and at least, say for example, banks, they don't incur cost in managing the currency. They manage it on behalf of Reserve Bank of India. In this case, as I explained, that all the players in the ecosystem, they are bearing a certain cost, including the Government of India when it gives incentive by way of. So UPI has become popular and so much popular only because there was active promotion and the cost to the merchant was made free up to a certain number and amount of transactions.
I'm going to come back to BharatPe now and use the BharatPe example to understand how third-party payment platforms, plan their future. You acknowledge that merchant acquisition is tough. They are not always loyal, so retaining them is tough. Banks as partners, they also have their own technological challenges. So basically today, if you're a player in this space like BharatPe, what are the top 3 priorities which will ensure profitable survival?
Yeah, so it is a study where, like, if I put it that what is our raw material? So raw material is merchants. So we have to acquire merchants, irrespective of that it is a costly affair. And then do the cross-sell, as I gave the example of lending, but there are other cross-sell opportunities also, like insurance product. You can sell insurance product to merchants, but for that you need license for distribution of insurance product. Same is the case with mutual funds, so cross-sell opportunities are there, but the revenue pool in my view is limited. So it is only the lending through which, by managing the credit risk well, having a superior underwriting practice, because underwriting happens at both the levels. We also do our preliminary due diligence underwriting, but the partners, whether it is an NBFC or a bank, they have their own underwriting standards and they take independent decisions on that. So more volume can make the business profitable. Plus there are investments which BharatPe has made. 49% investment we have made in Unity Small Finance Bank. We have acquired recently an NBFC, we have made 51%. So it's a combination of that. You just don't remain confined to payments. We have got a payment aggregator license, BharatPe. So for anyone, whether it is PhonePe, PayTM, BharatPe, they will be an ecosystem player, not only a payment system player. And that is where we have to look for getting our margins and as well as managing the costs through digitization of all the process, through innovation. Whatever scope is there in merchant acquisition cost can be brought down if we are careful in selection of the merchants and ensure that the churn rate is low.
Absolutely.
So there are strategic actions, I would say, that any player will have to take, and they all are doing that, so that continuously and forever you can't lose money. At some stage you have to make money for your shareholders. Public good, everybody understands, and I would say that all the players have done their bit, and they have done it very well in promoting the system.
Okay, hold that thought, sir, because we're going to take a very quick break on Serious Business. Back in a moment, more questions that you, our viewers and subscribers on NDTV and NDTV.com typically have, and I'm going to ask them from Rajnish Kumar. Welcome back to Serious Business on NDTV. Today we're in conversation with Rajnish Kumar, former chairman of State Bank of India, an organization that he served for 40 years, currently chairman of BharatPe. And we're talking about the digital payments ecosystem in India and how it's evolving, what the challenges are, what the opportunities are. I want to turn attention now to some of the other startups that you're involved in. And in some way or the other, they all seem to have their challenges. When it comes to a Byju's or it comes to a Oyo's and it comes to a BharatPe, is there any common sort of issue that you find now that you're so actively engaged in this space?
Yeah, so common issues that they all started small. And there was a setup where there were 2 people, 5 people, 10 people. And all of them grew very fast, whether it is Byju's, BharatPe, Oyo. When you are growing very fast and you are young, you are energetic, so certain aspects, all of them did very well in creating a business, in creating a brand. But the organizations grew so fast, and what happened in the process, that certain governance practices which are required for running a organization of the size which today Oyo, BharatPe or Byju's is. So unless you have a proper governance structure, the issues can happen, and that is what exactly happened. And if all these people had some experienced advisors, probably some of the pitfalls could have been avoided.
And that's the role you're playing now.
That's the role playing, and everybody has recognized the fact that for a startup, the ideal combination is that their capability to innovate, their capability to do things fast, their capability to innovate. So that should be allowed to flourish. But at the same time, you need some people with grey hair or no hair to put some checks and balances.
So
it's an ideal combination.
So what's the thing that you find yourself sort of saying the most often? The advice that you find yourself giving the most often when you're on these startup board meetings?
So there are one are the rules, in the sense there are MCA rules. If somebody is listed entity, then there is a SEBI rules, a stock exchange rules, tax laws. So there are a whole host of laws. So my role is not to read those laws to them. In corporate governance, what I have found that certain very basic principles which we picked in the childhood, they matter most. You have a written law, you can have all the law, and there are lawyers to take care, there are compliance people to take care. But for organization to survive in the long run, there are no shortcuts. You and me, we have learned it that honesty pays. So that is the first lesson in corporate governance, which is not hard-coded in the law, but honesty pays. If your statement of accounts, financial statement, says that this is a true statement of affairs, so it has to be a true statement of affairs. There is no scope for it being otherwise. Again, I will come to BharatPe. It's a private limited company. So the legal framework is different from a public or listed entity to a private. But BharatPe has independent directors. There is no requirement for having independent directors. It has audit committee. There is no requirement for having audit committee for a private limited company. We track related party transactions. These are some of the areas which come in the governance.
And would it be fair to say that you have really pushed forward these areas?
Absolutely. That was for last 12 months we were doing this and keeping the business also alive. Both the things. Because again, as I said, that the startups, their strength is in innovating and moving fast.
And they should be allowed to do that.
They should be allowed to do that, because otherwise they are not startups or they are not innovators.
Without getting into specifics of controversies, do you find that startup founders, original teams, management are willing and open to truly take the mature path forward after a dizzying growth chapter?
No, I see that intent. And if you see 2 years ago what even Oyo was and what it is today. So as I said, they are young entrepreneurs. Hitesh is very young and he built such a wonderful business which is competing globally. And the early mistakes which he might have made in the business strategy, not as much on the governance side. There were much less issues on the governance side, there were issues on the business strategy. But that he has done the course correction, and now Oyo is also break even and making profit and fewer complaints. So it's not that they have not learned their lessons. So the life teaches you so much, and if you are willing to learn and do a course correction, then you are successful. If you are not willing to learn and don't do course correction, then nobody can help you. Who can help such person? Nobody can help. Same thing I am finding that.
And Byju's?
Same thing I am finding that they are trying very hard to, to put their house in order. The challenges are much more there. So, as I said that if I'm very open with you, if I take Byju's, if I take BharatPe, if I take OYO, the most difficult one situation is for Byju's. BharatPe, we had certain problem, but we moved in and fixed it very, I would say quickly, but still it took 12 months to set the house in order. And similar result outcome I am expecting in Byju, but let us see how things evolve. But it's a wonderful edtech business, and it is in the country's interest that none of these entrepreneurs, whether it is Byju's or it is Ritesh Agarwal or BharatPe, so they should flourish. We should keep their flag flying high. It is good for the country, it is good for everybody, and it's good for India. So one of the, when people ask me whether they believe it or not, but one of the intent also is that I believe in a startup ecosystem and the story of India. I think they should be all right.
Well, on that positive note, I'm going to call it a wrap on this conversation. Thank you very much for joining us, Rajnish Kumar, on Serious Business.
Thank you very much.